Welcome to Market Moves of the Yardie, where trading meets culture and learning comes with vibes. So today's lesson is on market structure. I'm very excited to share this lesson because once you understand market structure, you have a strong foundation in trading the financial market. So as usual, as you watch this lesson, make sure you have a notebook to take notes because note takers are money makers. So the learning targets for this lesson is that we will understand what market structure is in the Forex market. We will identify bullish and bearish market structures. We will recognize key swing highs and lows, and we will use market structure to anticipate potential trading opportunities. So let's look at the key vocabulary words that you should know by the end of this lesson. Market structure, that is the framework of price movements that traders analyze to determine trends. Swing high, price reaches a peak that surpasses the high points around it. Swing low, when a low is lower than any other surrounding prices in a given period of time. Bullish structure, a pattern of higher highs and higher lows. Bearish structure, a pattern of lower highs and lower lows. So let's begin with this warm-up activity. How do you know which direction the market is going? Take a moment and write your response in your notebook. Well, we know which direction the market is going by analyzing market structure, specifically the patterns of highs and lows on the chart. By observing these patterns over time, traders can identify whether to buy, sell, or wait, depending on the direction of the trend. Tools like trend lines, moving averages, and support resistance zones can also help confirm the market's direction. Look forward to lessons on trend lines, moving averages, and support and resistance. So understanding market structure in Forex is essential because it provides a clear framework for analyzing price movements. It helps traders identify whether the market is trending up, down, or moving sideways, which is crucial for making informed trading decisions. Market structure also reduces emotional trading by allowing traders to rely on logic and analysis rather than impulse. Since market structure applies across all time frames, it serves as a universal tool that builds confidence, discipline, and consistency in trading. So let's take a look at the bullish market structure. In a bullish trend, bullish means you're looking for buys, right? Remember to check out that opportunities to look for buys lesson. In a bullish trend, price forms higher highs and higher lows. So let's take a look at the higher highs and the higher lows. So as you know, it's called a higher high and higher low because the new high, was higher than the previous high. It's called a higher low because the new low is higher than the previous low. Now this is what it looks like on the chart. As you can tell, this price chart is in an uptrend. And it doesn't look as neat on the chart, so you have to train your eyes to look for the highs and the higher highs and the higher lows. But in TradingView, which I'm going to also provide you a lesson on, you could switch to a line chart that provide a cleaner view of the trend. But you have to train your eyes on the candlesticks to look for the higher highs and the higher lows. Next, we have a bearish market structure. In a bearish market structure, price is forming lower lows and lower highs. So the new low is lower than the previous low, that's why it's called a lower low. And the new high is lower than the previous high. That's why it's called a lower high. And this is what it looks like on the price chart. As you can tell, this is in a downtrend, and once again, you have to train your eyes to look for the lows when you're looking at a price chart. Or you can switch to a line chart that gives you a better view of the peaks on the chart. But what if we don't have higher highs or higher lows, and we don't have a bearish or market structure? Well, in that case, the market is ranging. Okay, ranging, the market is consolidating as well. That's another term that is used for when the market is ranging. And during that time, the market is making equal highs and equal lows, as you can see on this chart. So far we've discussed a bullish market trend that's making higher highs and higher lows. We've also talked about bearish market trend, which is making lower lows and lower highs. And we also talk about when the market is moving sideways, it's making equal highs and equal lows. So this is an example of everything we've discussed on a price chart. As you can see on the left, this is a downtrend, and on the right is an uptrend. And this line that is drawn, you have to draw this line on the price chart. That's a trend line. If you notice, a trend line for the downtrend is drawn on the top, right? Because like I said in the introduction to trading video, sellers like to sell high. So the downtrend, you draw the line on the top of the peak. For an uptrend, you draw the trend line on the bottom of the peak. Why? Because traders like to buy low, right? So you look for, and every time the candlesticks hit your line, that's an opportunity for you to participate in a trade based on your trend line. And when the market is ranging, as you can see here, once again, it's making equal highs and equal lows. It's not going in any specific direction. And this time, you will wait for a breakout, whether to the upside or the downside, for you to participate in a trade. So let's take a look at this chart. And the activity is for you to identify the trend and explain what's going on in this trend. Take a moment, analyze the chart, and write the trend that this chart is going in, and an explanation or justification of the trend. If you wrote that this is an uptrend or bullish trend because the market is making higher highs and higher lows, amazing job, good job, you understand market structure. Let's not stop there. This is your task. So your task is to go to tradingview.com. Once you click on tradingview.com, you could click on products and then click on charts, and then you'll be able to find the different markets. You could click on Forex. Once you click on Forex, you could pick a currency pair and a time frame. The 1 hour time frame is preferable, and you could select the Great Britain pound against the US dollar. Take a screenshot and label at least 3 higher highs and higher lows, or lower lows or lower highs on the chart depending on the trend. If you're not sure on how to do this, you can always ask in the comment section. Rewatch this video and submit your responses for review at marketmoveswithayardie@gmail.com. Thank you, and looking forward to seeing you on the next lesson.